Boom. All right, ladies and gentlemen, let's get this one started. I know you want to invest. I know it feels like you're gambling on Wall Street, but let's stop doing that and start creating some purposeful wealth. Let's get this one started on this episode. Here we go.
Shut up and sit down.
Look, a business can give you everything you want in life: prestige, wealth, freedom. It can also take everything away from you. This show is for those who are willing to take that risk. These are the real life stories of entrepreneurs. But before we start, I have one small favor to ask. Please leave a comment. It can be advice, critiques, tips, feedback, or share this with someone because your engagement is the most valuable and most powerful form of social currency. So thank you, and welcome to another episode of Business Bros. All right, business bros. He's a former mortgage banker who walked away from Wall Street rules to design a life of true financial freedom. He teaches purpose-driven strategies that help people reclaim time, align money with mission, and ditch the rat race forever. So please welcome to the show, Mr. Joey Mure. Let's do this, Joey. Welcome to the program.
Thanks for having me. This is awesome.
I'm excited, dude. We talked for like 3 minutes before the show started, and already I'm like, okay, this guy's gonna help a lot of people. He's gonna set people up financially with a strategy very few people actually know about, but the ultra wealthy definitely use. Give me a little bit of background information, man. How did you go from mortgage banker to helping people set themselves up for real wealth?
Well, I'll tell you, it all started with some really life altering kind of memories. If you think about it, I have 5 daughters, and yes,
enough said right there. Actually, just stop right there. That's the motivation you need. Right
please,
there, 5 daughters.
Please pray for me after the episode. But when I was in the mortgage game, I was 100% chasing the next dollar every time. It was the rat race. You're on the constant flow of, I have to close another deal to get paid, close another deal, super active. And if you stop putting your foot on the gas pedal, everything falls apart. And so, man, I would find myself making great money, making over $300,000 in my late 20s and thinking, man, this is great. I have good income, but it actually didn't turn into financial freedom. In fact, it required me, when we go on vacation, I'd be that guy up in the condo on the beach. My wife and kids they're going out to the beach. I say, hey, I just have to make this one more phone call because it can never let it go, right? Yeah. And then what would happen 4 hours later, I'm walking down the boardwalk on that out to the beach, and there's my wife and kids coming back up at the same time. They're done for the day. And here's dad. He's saying he's working for helping the family, and yet he's not present. And man, I'll just say that was kind of one of those things. I didn't really know what the answer was at the time, but I was like, this isn't what I signed up for. Like, this isn't true financial success in the sense of, if it means I lose the people that I'm working for. And so, man, just that led to several other things. But I read a book back in 2009 that shifted my whole focus on finances and told me that there was a different way, something I had not learned about before, but it was like something just finally clicked, and it set me on a path that then 4 years later, I quit my job to go teach people exactly what I read in that book.
Isn't it amazing? The entrepreneurial journey it's funny how it works. I always equate it to like buying a lottery ticket. When you buy a lotto ticket and you spend a couple bucks, the next few minutes you're thinking about, what are you going to buy? How are you going to live? How are you going to spend all this money and all this time? And when somebody starts a business, they think the same way initially. They're like, dude, this is going to be awesome. I'm going to make all kinds of money, have all kinds of time and freedom. But they find themselves stuck doing the day-to-day minutia. And I think oftentimes, and there's a lot of entrepreneurs that are out there right now who might be successfully making a lot of money, but doesn't mean they necessarily have that time that they're looking for. So they go and try to invest their money because that's the next thing that they understood. I learned how to make it. Now I'm going to go invest it. They go into Wall Street. The cycle kind of goes up and down. down. And when the market's down, they feel terrible. They can't sleep at night on top of trying to grind and do their stuff. There's got to be a better way. What was the wealth without Wall Street method that you stumbled across?
Well, I'll tell you, it was starting to take essentially the formula and flip it on its head. To your point, hey man, I'm making all this money. Now I need to do something with it. I'm going to just put it, I'm over here busy running my business. I'm going to go put it over here in Wall Street into this advisor's hands. They're going to manage it for me. They're smarter than me. They have more different degrees than me. Obviously, I want to be the one to let them run it for me. But everything that Wall Street puts your money into takes it out of your control, out of your access, and puts it into their control, into their access. What do I mean by that? 401ks, IRAs, 529 plans, all of these things separate you from your money, and they also then require high fees or penalties to get access to them back. So you never really have access to cash. Where if you think about that and you're a business owner, it flies in the face of everything that you do on a day-to-day basis, right?
Mm-hmm.
How can you scale your business without capital? It doesn't happen, right? But we've knowingly given our money up to something that we can't touch until we're in our 60s. That makes no sense. But yet that's what the herd has always told us that we need to do. And what this book told me is, man, you need to take control of your own finances. You need to become the investor, not to allow Wall Street to be the investor on your behalf. And by the way, if you think about it, everything else in our lives, we take full control of if we want to have a good outcome or result. You don't ever, and I mentioned I have 5 daughters, Hernan, you don't ever have that first baby and say, you know what? I really don't know what it's like to be a dad. So I'm just going to hand this off to someone else and they're going to take it for me and run with it. Like, it doesn't exist.
No way.
I've got to become the dad that I don't know how to be. And I'm going to do whatever it takes to do that because this is too important. If we don't change our mindsets to do the same thing with the money that God's given us and trusted us to steward well, then we miss the whole point and we end up in this cycle, as you mentioned, of anxiety over our money, not being in control, and not buying back our time, which our money could do for us if we change the formula. And I'm happy to share what that formula was for me.
Yeah, let's do that. And let me kind of recap, because I think when somebody gets into a situation where they have some extra cash, if they're young, usually they tend on blowing it on fun stuff, right? They drink it away, they party it away, and they're not really parking any money away that they should. When they're a little bit older, it's a different way that you kind of hoard money. It becomes like a fear. Like, I've made all this money, now I'm so afraid of it going away. I don't know where to put it. I don't want to put it somewhere where it's just going to deplete, where it's going to lose money. And I think that fear is what puts us in that position where we're like, I'm going to hand it off to that money manager. I'm going to hand it off to, an IRA or something. So what is that first step? What should somebody do when they want to start parking their money in something that they have control over, but don't want that fear of, it's going to go away?
Yeah. Well, first of all, the formula that they have to work off of, they have to change the way they think. It's not an accumulation game. Like, I need a mountain of cash when I'm 65 that I can start taking money off of and hope it doesn't run out. Like, that is a Wall Street lie that we all fall for hook, line, and sinker. It never works out. Okay. The difference is we need to start working from the formula of, if my passive income is greater than my monthly expenses, I'm now free.
Yes.
Okay. So you're a business owner, you're grinding every day. You're doing that because you have monthly expenses that need to be covered. And you're the only money at work, or excuse me, your time is the only thing at work. But when you start to put your money into places that create passive income that shows up when you're not there, i.e. real estate, i.e. online businesses, i.e. Different Turo and car rental services and things like this. And I can get into all the things that we invest in later. When you do that and those things start to eclipse what your monthly expenses are, now you can show up at your business because you love it, not because you have to. Mm-hmm. And by the way, your clients and the people that you serve can actually like they will trust you more when they know that you don't need that sale, right? There's the whole idea of commission breath. Man, when you
Yes.
need that sale, it comes across. Everybody knows it in the room. You can't hide it. But man, when you have all your bills paid and you just show up because you love what you do and you want to serve people at the highest level, man, that is true freedom. So then if that's how we're keeping score, right? My passive income exceeding monthly expenses, where I park the capital that I have before I deploy it into a passive income asset matters. It matters a great
100%.
deal, right? I can no longer put money in 401ks, IRAs, even 529 plans. Like those sort of things no longer work because I don't have access to the cash. I can't actually deploy it into a passive income asset. And secondly, I could just put it in a savings account, but what is that going to really do for me? It's not going to keep up with inflation.
Nope.
And be honest, it's going to be taxed even if it does grow. So it has like some negatives against it we don't really think about. So the opportunity that I learned about in that book in 2009 was that there's a alternative that banks are putting their money into secretly behind the scenes that nobody really understands is going on. And I'll give you this as an example, Hernan. When I read this book, the author mentioned that banks, you think about this, how do banks make money? They take depositors' money and they lend it out and they make the spread on what they pay those depositors for the use of the money and how much that money makes out in the marketplace. True, right?
100%.
So give you a simple example. They pay you 1% for your money on deposit. They make on average 6% out in the marketplace in mortgages and credit cards and business loans, whatever the case may be. You think, man, they made 5%. But really, they made 6 times what they paid you, which is almost a 600% return. Banks know what they're doing when it comes to money. And you would say, well, what did they do with their money after they've made that spread? And you think, well, let's look at their balance sheet. On their balance sheet, you would see 2 big things on there. And the first one's not a surprise. It's real estate. Right?
100%.
They put a ton of money into real estate. That's why they're always in the best locations. They have the big high rises everywhere, the marble floors and the big, crystal sucker jars that they put out there to get. Why do they hand us out suckers?
That's because that's what we are when we walk into the bank, dude.
I'm gonna leave that up to you.
You're 100% right. It's exactly. They have a lot of real estate because it's a great collateral. It's going to secure that cash and make sure that the cash flow is coming in because most people aren't going to pay their 30-year mortgage. They're going to refinance every 7 years or do something like that. Keeps the cash flow coming. And we as consumers, when we want to borrow money because we want to invest in a house or we want to buy a business, we want to do any of those things, the first thing we do is go to the bank. We're not playing by the same rules as the bankers are playing by. Homie, if I can understand the rules, I could probably do better than the banker, wouldn't you say?
Exactly. And the second thing on their balance sheet, besides real estate, is whole life insurance. And when I say whole life insurance, I'll give you an example. I was at Wells Fargo when I learned this, when I was in the mortgage business. And I went around and I was like, man, I've heard nothing but bad things about whole life insurance. Like, why would people put money in that? It's a bad place to put money. And so I started asking the bankers at Wells Fargo. These are like the executives at my local level here. I'm in Birmingham, Alabama. And these executives that were there at the time, they all told me the same thing. They were like, Joey, yeah, whole life insurance, that's not a good place to park money. And nobody does that. Simultaneously, this is no joke, Wells Fargo had $18 billion of cash value life insurance on the books of their balance sheet. And many of the guys that told me that it was a bad place to put money were the ones that were insured by the bank. They were the key employees that the bank was able to insure to put that money away into cash value life insurance. So when I say you have to kind of know what's going on behind the scenes, it's in broad daylight. It's on their like publicly facing balance sheet. You can look this up at your bank that you go to, and you can see how much money these banks are putting away into this. But to the general public, you have to do as banks do, not as banks say. and you have to shift. Why would they put money into whole life insurance? Well, it's because of the fact that it's liquid. I can get access to it anytime. It's growing at a guaranteed rate of return plus dividends. It's growing tax-free, where I can gain access to it tax-free, and it will pass to my inheritors tax-free. And I can use it and allow it to grow at the same time, meaning
Joey,
I can leverage it and it continues to grow, and I can have it working in real estate or another business at the very same time. So I have two assets growing at the same time.
but hold up. That's contrary to what everybody was taught, right? We were all taught life insurance, first of all, is a love product, and we buy it because we have family that we want to make sure they're taken care of in the event of our death. We should buy term and invest the difference. We've heard all this before, and everybody everybody was told anyways that whole life insurance policies aren't going to work. Now you're talking a little bit different here, right? Because in a term policy, oftentimes there's no cash value. There's nothing. I pay the premium. I don't die, which is the bet that I made. I'm anticipating that I'm not going to die. The bank's betting that I'm betting actually against myself. I'm betting that I am going to die. The bank's saying, no, you're not going to die. We'll take that bet. But there's no cash value. This money kind of gone. If I don't die, there is no benefit, right? Yes, you're absolutely right. If I die, my heirs get some tax-free money. But why the whole life? Like, help me kind of narrow this down a little bit. How does that relate to me being able to invest in businesses and buy real estate?
Wow. So a couple of different things that you just mentioned. When I first learned about this, I had over $2 million, I had like right at $2 million of term insurance. And I thought, man, Hernan, I am like dad of the year. Like nobody has more insurance against, my life than I do. But when I learned about the fact that the term policies almost never pay out. We're talking less than 2% of the time does a term policy ever pay out. So I recognize this is actually super expensive, because if you think about 30 years of paying a premium and never getting anything in return for it, that's a really expensive product. Mm-hmm. And term insurance has the mask that it's really cheap, because the monthly or the annual premiums are less than a whole life product. But when you think about whole life, it is not only a death benefit, because when I started to think about it as a cash flow system, a bank, if you will, way in which I could fund this whole life policy and then borrow against that whole life policy, because the insurance company gives me the ability to request a loan against it at any time for any amount that I have access to, then I now no longer think about it just simply as as you mentioned, a love product, a way that which it will eventually pass to my heirs. I'm going to limit that at all possible if that's the case. But if I have access to every dollar that I put into this from 7 or 8 years and beyond, which is about how these things work when they're properly designed, now it actually costs me nothing for the coverage, because I'm going to put in $1 and it's going to have created more than $1 in value over my lifetime, sometimes 3 and 4 times what I put into it. So I get my insurance for free, but I get the system behind it. This is the key that nobody knows about, is I have a cash flow system that is growing. If let's say I have $1 million in cash value and I go borrow $400,000 against the million from the insurance company, I go and borrow that $400,000, not of my money, but of the insurance company's money. I take that $400,000 and I go buy a piece of real estate, or I go buy into another business, or I go buy into fill in the blank. There's a million things you can invest in that create passive income. I still have $1 million of cash value growing at guaranteed interest rate plus dividend every year. And you're like, well, wait a minute. How is that possible if you took 400 out? The issue is I didn't take 400 out. I borrowed it just like you would an equity line against the equity in your house. I borrowed that money from the insurance company, and I have to pay that back I have interest and all this sort of stuff that's due, and I can get into that if you want to. But I now have $1 million asset growing, guaranteed with dividends, and a $400,000 asset growing, assuming that I bought properly and invested well, and I've got both of them growing at the same time. Can you imagine how much better off you and your heirs would be if you could take $1 and make it do two things at once?
Man,
That's what's happening.
It's the power of compounding, right? Compounding your money is that eighth wonder of the world. It's magnificent. It's great, but we're only really taught to put it in the stock market and watch it grow over time, which means that if you didn't do this when you were, 18, 19, 20 years old, you're running out of time when you finally start in your 40s and 50s thinking about retirement. However, if you can maximize the amount of money that's being invested and recurring, bringing back that income, all of a sudden you're shrinking the time frame, but increasing the income that's coming in multiple ways. I love the way that looks, and I was looking at some of these Instagram comments that we're getting over here, and some of them are saying, well, is it commonly used as an IUL, as a different type of policy here that we're talking about? I won't explain. I'll let you do that there, but are there different type of whole life policies that we can get into for these type of investments that allow us to borrow more or in a more tax advantaged way?
Yeah, great question. And the author of the book that I read, by the way, it's called Become Your Own Banker by Nelson Nash. He was my personal mentor. He lived here in Birmingham, Alabama, and we used to have lunch on a regular basis, and got really close to him, even was there close to when he died in the hospital, got to spend time with him. But what he always recommended is a whole life policy with guarantees built into it that it was done with a mutual company. And mutual company, because the dividends are then tax-free, because I'm a part owner in the company by being a policyholder. There's a lot more details behind it. When you talk about these other ones like VULs, IULs, any sort of other type of product, they promise bigger returns within the policy, but they do it at the expense of putting the onus on you as the policyholder. And they say, well, oh yeah, well, if the market creates this kind of return, then you'll get this kind of return. But the reality is this is your savings dollars that we want to use to create passive income with. We don't want the policy to be the end. The policy is not supposed to be the investment. The investment is in your business. The investment is in real estate. The investment is in mobile home parks, whatever the case is that you want to invest in. But the cash has to be in the most safe, guaranteed position because it takes the onus off of you. The investment is going to be on you, but the cash you never want to put into something that is subject to those kind of volatility and there's a lot more details even below the surface, Hernan, that I won't get into today as it relates to IULs. But in his book, he definitely talks about a couple of things regarding this. And the bottom line is your savings is your savings, your investing is your investing. Don't mix the two.
Yeah, I 100% agree. I remember listening to Grant Cardone talk about something, different investment strategies. And one of the things he said that caught my attention is he doesn't save money, he stores it. And he puts it in somewhere where he can park it for a moment until he finds an investment that he's going to put that money in. And I think the key here is where you're parking that money. You're securing it in a life insurance policy that, look, you could borrow it all. You can have troubles paying it back, and maybe you don't pay it back. But when you pass away, that's when that money is going to get paid back anyways. There is a tax-free disbursement of life insurance proceeds that happens, pays off that debt. And if you build it correctly, which we haven't even dived into when we're talking about trusts and all these other things that go into building this infinite banking system, you really set yourself up, not just you, but your family and then future generations going forward. Properly setting something up like this will really set you up to be essentially your own bank. And not just for you. This will go for college. This will go for cars. This will go for houses. This will go for business investments for generations to come. Joey, literally in like 25 minutes, you've laid out a simple plan that people can definitely follow. Not easy to set up, but simple to follow. If people want to find out more about what you're offering, what you're teaching, and how can they do that?
Yeah, man. And I'll tell you, we haven't even scratched the surface on becoming the investor that you need to be. That's a whole nother conversation. In our podcast, we talk about that. But if you want to learn more about what we're doing and even see how close you are to financial freedom, we have a free quiz and our contact information you can get at wealthwithoutwallstreet.com/business bros. So wealthwithoutwallstreet.com/business bros.
Now, I gotta ask you, there's so much that can go into this. And a lot of times when people start thinking infinite banking, they start seeing this is what the ultra rich are doing. They're stuck in a 9 to 5. They've been doing this for a while, right? And they see this as, yeah, that's something other people do. How do I get started? If I'm stuck in a 9 to 5, I've never been an entrepreneur. I've never started investing, or maybe I'm a solopreneur and I'm just doing this side hustle. I'm trying to grow my business, but I still have a job. Like, how do I get started?
Well, I'll tell you, many people don't even realize that they're putting money in places that are not helping them get closer to their goal. And a couple of those would be what we've already mentioned, right? I've been funding this 401k for years and years. It's not growing or it's staying the same. And it's not accessible to me to grow this side hustle or to this business or to get me out of my 9 to 5. So one of the first places you find is there's leaks in the bucket. That's one of them. The second one would be is, man, I pay cash for everything. So I have no access to cash because it's always being used on the next thing. And then I stack it back up and then I use it and I stack it back up. And it's not efficient. And the infinite banking would help you solve that. And then the third thing that I see very commonly is people are paying off debt faster than the schedule that they're supposed to. Okay. So for instance, they're like, hey, I've got a 30-year mortgage, but I want to pay it off in 15. And so they're putting extra payments every month towards a liability that they want to eventually be free of the payment. I get it. Like, nobody wants to pay debt unnecessarily. But if you think about when we go back to the formula, when your passive income exceeds your monthly expenses, if you're constantly just focused on paying off debt, you're not building the passive income side. You can never pay off the cost of living. Okay, I'll say that again. You can never pay off the cost of living. So let's say your mortgage is paid off, your cars are paid off. What else do you still have to go out the door every single month? You got groceries, you got your gas bill, your power bill, gas in your car, utility, insurances, whatever, you name it, medical expenses. Those things are always going to be on you. And it doesn't create freedom unless you focus on the passive income side. And I'll tell you, if you've never played the game Cash Flow by Robert Kiyosaki, nobody ever wins that game by paying off debt. The only way they win is by buying assets to create passive income that pay off the monthly expenses every single month. And that's the way we have to shift our way of thinking. So to answer your question in short form, quit putting money in places that are not getting you closer to financial freedom. And if you need somebody to help you, our coaches actually walk you through a process to help identify this. You say, man, I don't have a lot of money left over every month. Usually it's because you're not aware that you're unknowingly putting money where everybody else says to do that's not helping you get there. And all of a sudden you could free up the capital that would take to get you out of that 9 to 5.
Sometimes it takes a trained eye to take a look at your overall situation. I remember when I first got into taxes, one of the ways I got into it to build a client base was I would review people's W-4 information. I'm like, look, you're getting what, $7,000, $8,000, $10,000 a year coming back to you in refunds. And what are you doing with it? Oh, it just starts to say, man, you need that on a month to month, and we can put it into this, and we can do, pay off this thing or whatever it was that client was looking for. But to find the money, trust me, you already have it. It's there. You're just unaware of how it's being spent or where it's being parked. Joey, any final thoughts before we head out, man? I know there's people that are going to head over to wealthwithoutwallstreet.com/business bros. They're going to take that quiz. They're going to figure out, look, I'm tired of working my 9 to 5. I'm tired of struggling on my debt. I need to situate myself so that I can have access to money like the rich do. And then I can focus on building that passive income. Any final thoughts before we head out?
I want to say this because I think a lot of people need the challenge. At the end of the day, people will say, Joey, what you're saying sounds really hard. Be an investor, take some risks by putting money into things that I don't necessarily know everything about. Like, maybe should I invest in Turo or land business, or a vending machine business, or like there's all these possibilities, and it seems kind of scary. It seems hard, but I'll say this: on the other side is also hard. If I continue to grind it out for 40 years in a 9-to-5 that I don't love, or in a business that's owning me because I don't have any passive income, that's also hard. In fact, I would beg you to say it's actually harder. And so at the end of the day, you have to pick your heart, right? Am I going to pick the hard by just saying, yeah, this is too much, and I'm just going to keep doing what I've always done and to try to expect a different outcome? It's not going to work out, guys. I'm just telling you. But you pick the hard of taking back control of your finances. You start thinking differently about where money flows to, and then investing in things that you can become an investor by learning and understanding. And we have a whole process for that. That hard becomes a lot easier. So pick your hard. And I want to just encourage you to take action, because that is going to lead you to so much better outcomes.
I remember I got a mentor that he always talks about that the struggle of doing things, the hard is not really the difficult part. It's just that you're unaware of what's going on. It's you've never sat down to learn from it or do anything with it. I remember when I used to play poker, for example. I used to play online poker back in the day. And when you play for free, everybody goes all in on everything. It's a weird game. The moment you start playing for pennies, all of a sudden things get real. The moment you have your money into different things, you'll start to pay attention. You'll start to learn. All of a sudden the vocabulary becomes familiar. You start understanding these different strategies. It's not that you can't do it. You're just unaware. And I promise you, once you start taking one step, you'll take the next step and the next step, but you have to take action. And it starts with going to wealthwithoutwallstreet.com/business bros. Take that first step, start to equate yourself with everything in this space. I believe me, it's going to be a fire hose of information, but you drink a little bit at a time and you get a little bit better. You get a little bit better. You get a little bit better. And before you know it, you have a habit of putting that money into a storage account that is properly structured. And then you start looking at different investments, and you can look at whatever tickles your fancy at that point, but you start to learn a little bit more. Dive in. That's the action that you need to take. Joey, thank you very much for being on the program today. One more time, ladies and gentlemen, wealthwithoutwallstreet.com/business bros. That's where you got to go to get started. We'll catch you guys on the next one. Peace. And we're out.
It's over. Go home.
Is your business in need of marketing? Try starting a podcast, but not just any podcast. Podcast like a pro. We can show you how to take your business from being invisible to becoming a brand people trust. Go to www.businessbros.biz to get started.